Hello, I realized after my last video that some people might not know what an S Corp is, much less when to convert to one. So I decided to make a video on what an S Corp, short for S Corporation, is. Basically, it's a tax election. It doesn't mean you go out and create or incorporate your company. You can do that if you want and still elect to be an S corporation, but most people who create a corporation want to be an actual C corporation. That's what it's called under the tax code. An S Corp is a tax election created by Congress a few decades ago to help business owners save money, essentially. If you're a business owner and you've been filing your taxes for a while, you are probably used to filing your business information on your personal return. You know, the 1040 you file every year, the schedule that it's filed on is called a Schedule C. If you elect to become an S corporation, however, the business becomes separate from you and files its own tax return called an 1120S. It's a bit more complicated, quite a lot more complicated depending on the size of your business sometimes, but it is more complicated than a 1040. That was the cat in the background. I apologize for that. He is hunting something, sounds like an ink pen. Anyway, you'll probably want to have someone prepare it for you if you don't know much about preparing taxes, which cost you more money, which is part of the reason why it doesn't make sense to become an S corporation until you are making a certain amount of money. The benefits of becoming an S corporation are that you no longer pay self-employment taxes on all of your earnings. When you fill out your Schedule C at the end of the year, that net profit goes on your 1040 as income, and you have to pay both income taxes and self-employment taxes. When you file an S corporation return, it becomes a flow-through entity. That's the technical term for it. It just means the income from the business passes through the business into you. You still have to pay income taxes on all of it, but you only pay self-employment taxes in the form of payroll taxes on the amount you pay yourself as a W-2 wage. And you have to pay yourself. You can't just become an S corporation and never pay payroll taxes again. Some people tried that, and the IRS instituted a rule saying you have to pay yourself a reasonable compensation. Now, that varies based on what your business is, what it makes, number of years of experience, etc. But you have to pay yourself something. That is all the payroll taxes you will pay. If you're making $100,000 a year on your business, I'm just going to use nice round numbers here, and you have a Schedule C, you are going to pay income taxes plus $15,600 in payroll taxes. If you become an S corporation and you're making that $100,000 a year, you're still going to pay income taxes on all of it. But if you're paying yourself a W-2 of $50,000, you're only going to pay payroll taxes on the $50,000, which means you go from paying $15,600 to half that, about $7,800 a year, if I can actually math at this time on a Friday. That's a significant amount of tax savings for anybody. And the more your business makes, the more you save. And you don't have to just rely on what you pay yourself as a W-2 to survive on. You can take more money out of the business, and those are called distributions. Because you've already paid taxes on them, you can take out as many as you like, down to what we accountants call your basis. You don't need to worry about that right now. But to become an S corporation, all you have to do is file a Form 2553. Yes, I know tax accountants and the IRS love their forms. You file that with the IRS. You can do it yourself. You can get help for it. You need to have your LLC in place before then. If you don't, you need to have an LLC in place anyway. It only costs a couple of $100s to file one, and it'll protect your personal assets in your state. If you have any questions, you can always contact me or another tax accountant. Thank you and have a good day.